The Fed cutting rates, hard even to believe, Sergio, that you just said it 4 years since they cut rates. I feel like we were in a rate cutting cycle forever. It seemed like, and we kind of were really, but I don't really have a clear grasp as to what I think will happen in the market here. I would prefer right now to be long small caps, just because I think that they'll reap a short-term benefit, and in a bull market I think they'll play a catch-up trade. I kind of like gold too. I just think gold has an opportunity. To be clear, in my long-term portfolio, the only two things I own, not the only two things, but the two things I own the most of are
Hey everyone, Sergio here. Welcome to another episode of Insiders of Wall Street. Well, today I'm in the presence of royalty. Here's Anthony Crudele, and I'm going to have him introduce himself, obviously, but I'm going to name this episode actually the past, the present, and the future. So, with that said, Anthony, welcome. Thank you for doing this.
Sergio, thank you so much for having me here today.
Absolutely. So introduce yourself to our audience and, how you started and, what you do today.
I started on the floor of the Chicago Mercantile Exchange in 1995. I was 18 years old and became a member at the ripe age of 21 to trade the S&P 500. I worked in the meets to start, like everybody does. I worked for Lynn Waldock, and then I worked for Refco, and then I moved upstairs to the Eurodollar pit, and I spent a little bit of time working in the Eurodollar options pit for a small group, and then moved down to the S&P, worked for a group of locals. So worked on the trader side there. I checked their trades, gave them their money, got them coffee, did whatever they needed me to do. And from there, they really became mentors to me. And I had recently got into a car accident prior to that, and just kind of like fell into the trading floor. So I didn't have a background of it, and the reason I even brought up the car accident is just because I took the job on just a total chance. I took the job as a runner just because I had a broken leg and I needed to rehab it. And so I started from that position, and that's, I didn't come from a background, starting there at an early age, knowing about trading. And so I kind of fell into it and then fell in love with it. And I started trading S&P futures in the pit. And then really, I moved to the screen relatively quickly. I was not a very good pit trader. It was more political than I had anticipated. And prior to me becoming a member, I was actually going upstairs in 1997. They launched the E-mini S&P futures, and it didn't really get a lot of publicity, and it was not a very popular or actually very well liked product from people on the floor. But I had access to it because I worked on the floor and I was going upstairs and just testing it and trading on the computer. So it was really another thing I just kind of fell into, because just timing of being there for it. And after being in the pit for, 6 months or so and not really doing well, not that I would expect it to do well right out of the gates, but I just quickly moved to the electronic side of things and started trading the E-mini S&P. Then I was looking into the pit trading it. And as time went by, I started doing the ARB at some point. The ARB is where I was trading it and offsetting it with bigs. So we used to call the contracts, in the pit, the bigs. So I would offset that, with some pretty decent size partner of mine and myself. And so he stood in the pit and I would trade in the screen, and then moved to Florida. Fast forward, continued to trade the E-mini S&P after spending 15 years on the floor. Moved to Florida after CME, went to the Board of Trade. I spent a couple of years there, didn't love it. I felt like CME was my home. I didn't love the Board of Trade as much. Just wasn't the camaraderie wasn't the same. Just felt a little different when we merged there. And, and I had a heart attack at 36 at my trading screens at 7 a.m. in the morning. And That sucked. And then that took me into podcasting because I just needed to offset my life. I started doing other things. in business, and just really tried to create balance in my life so I wasn't solely counting on trading. I built a pretty good podcast called Futures Radio Show, started doing other videos and things and such, and really got embedded into the new culture that we have now, Sergio, where everything is online. And so, and that's really about it. I mean, I continue to trade. I'm not nearly as active as I once was. I was a very short-term scalper. Now I'm more of a swing trader. I trade options, actually a lot of futures as well.
Yeah. So that's basically the past. So let's talk a little bit about the present, which you already started talking about, which is, I mean, having a heart attack at 36 is and surviving it. I know it's a high stress job, but do you think there was a correlation between the stress of the job and trading, obviously, and your health situation?
Yeah, it was directly from it. And I internalized a lot of my stress over the years, suffered from anxiety, and a lot of ups and downs in the business. I've had some great success, but I've had some really unfortunate things.
Yeah, but you
happen
learn,
along
right?
the way as
We
well.
all learn from our mistakes. And so at the present, where are you based, by the way, Anthony?
I'm in Naples, Florida now.
Oh, Florida. Okay. And so you said you switched from, not switched, but kind of pivoted from being a scalper or day trader to a more of a swing trader, right?
Yeah.
As older we get, we also figure out what fits our lifestyle, because we don't want to. But then, when I watch these newbies, with their Lamborghinis all over social media, oh, look, I made $1 million today and this and that, right? I'm going like, slow and steady as we go. But so at the present, you're still doing some trading, but not as active as you were before.
I'm not active in and out, but I watch it every single day, and I'll trade when I feel that, there's an opportunity, so I'm not held back by trying to do less. I've just created a strategy that allows me to do less.
Yeah, absolutely. And so about the present, let's talk a little bit about that. Obviously, we had a major decision by the Fed yesterday, first rate cut in 4 years. What do you see at the present? We can also talk a little bit about the macro economy if you're kind of interested in talking about that. Do you see a disconnect in the, market making all-time highs with what's happening actually in the economy?
Yeah, I'm not a macro economist, so it's not really my cup of tea. I mean, I follow it just enough to be able to help me understand market environment, but the Fed cutting rates, hard even to believe, Sergio, that you just said it 4 years since they cut rates. I feel like we were in a rate cutting cycle forever. It seemed like, and we kind of were really, and then we went into the hiking, and now we're right back into cutting. You know what I mean?
Yeah.
I find that to be, as a trader, as an investor, I find it to be very difficult right now to understand why we have to go from cutting cycles to hiking cycles back to cutting. It's like, why is there no balance of time? Why can't interest rates stay where they are for periods of time? Let the markets actually digest and operate from a place with higher interest rates. I think it does everybody a little bit better, and so right now, I don't really have a clear grasp as to what I think will happen in the market here. I would prefer right now to be, long small caps, just because I think that they'll reap a short-term benefit. And in a bull market, I think they'll play a catch-up trade. I think everybody knows that. So it might be a crowded type trade, but I kind of like gold too. I just think gold has an opportunity here to continue to run. It's that slow grinder higher. And so when I look at that chart and I look at this environment, those would be the two places right now. I mean, to be clear, in my long-term portfolio, the only two things I own, not the only two things, but the two things I own the most of are the Russell small caps, and I own gold. I own some other stocks as well, but they're small positions. But those are my two biggest holdings.
Okay. All right. So as far as the present, you said, what kind of, I mean, as far as technicals, are you a technical trader? Are you basically just chart based, or deeper things that you follow? So if you can just give our audience a little bit of what you do, the color of what you do, what you watch.
Yeah, I think to be a short-term trader, you almost have to be technical. I don't know any other way really, unless you're just reading the tape, and you're just reading the depth of market, the dome, And so for me, yeah, I'm very technical based, but the macro backdrop's important to me just to understand market environments. Um, there's going to be ebbs and flows with it. So, like I said, I'm not a macroeconomist expert
Yeah.
by any stretch, but it does lead to where my technicals are going to come into play. And so it goes back to it right now. I think that because the Fed is in a rate cutting cycle now, not just cutting rates, they're actually, from the latest meeting, they're going to be continuing to cut rates. I think
Yeah.
that's the most important thing. It's not that they cut rates 50 basis points. I know it's a short term focus, but the real focus should be that they are planning to cut rates for the next 2 years. And so that is interesting that they've come to that conclusion that quickly, and they can't wait to get rates back lower. So I think if the economy is as strong as it seems, which I think the economy is strong, and I go about that measurement by some data and reading some macro experts, but also just being out in life and seeing what people are doing and spending. I don't think the economy is really weak. I think we're probably going to get into a recession, I think, within the next year. So I think that's probably going to happen. I don't think
Yeah.
it'll be a deep one, but that's why I like Russell, and I like, and I mean, indexes. I mean, it's hard for me to get away from the fact that the market, I don't think the market's going to tank from here.
Yeah.
But I think it'll be tradable to the upside.
Yeah, I agree. I mean, but obviously, I don't know how many all-time highs, 39th today, I think, or 40th this year. So, the trend is your friend, right? I had wonderful mentors like yourself when I was on the trading desks, and they said a few things to me, and one of the trend is your friend. I mean, the trend is up, but then, as a trader, you create a bias, personal bias, and that you let that get in the way, and that's how you go broke. but let's talk a little bit, couple of minutes about the future, and then I'll ask you about traders in general, right? And we'll talk a little bit about psychology. We'll talk about bias. We'll talk about these things, and then obviously I'll ask you towards the end. I'll ask you about your advice, because I do follow you on Twitter, and a couple of days ago you put a tweet out, and you just literally like put the Bible there. And I retweeted it, and I go, this is it. I go, if you guys don't read anything else on Twitter, because most of it's garbage anyway, but I go, you guys got to, if you have anything to do with investing or trading, this is what you need to follow. And yeah, what do you see in the future? I mean, look, where we went from what's behind me, right, to pits, electronic trading. Now we're into AI, right? Obviously, I'm sure you know about algorithms and how they do what they do. So what does the future of trading look like to you?
Well, I mean, let's also be clear, like obviously AI and algorithms have been a huge part of trading for the last decade too. I mean, it's just not talked about as much because now AI is really, machine learning has been going on for some time in markets, a long time actually. And I think that, markets are going to stay on the path that they currently are on. And I think more and more day traders will probably find ways to get more automated. And I think that's a good thing. I think that point and click will always be there. I just think that at some point in the future, as technology gets better and better, people will find quicker ways for automation. People will find quicker ways to create algorithms for themselves that they think that they like. I think that right now the reason why more are not doing it is probably just because they don't have that clear path to being able to program these types of strategies. So I think that will change in the future. I think that's where it goes. But for the most part, I mean, I think it's just more of what we have now. I mean, technology is always going to be the future. There's just no other way around it. I mean, I've seen it firsthand. I've seen, we always think it's going to accelerate much quicker than it does. And things, older methods and ways last longer than you think. And they always remain relevant in some sense. But they ultimately, the participants do start to embrace technology more and more as time goes by.
Yeah, I couldn't agree with you more. While we're at it, actually, I skipped that part when we're talking about your personal investment, as far as gold and obviously the small caps are also. What is your opinion on crypto, specifically Bitcoin? Do you think it has value? Do you think it's here to stay? Or, I mean, obviously, proof of concept is here, but What do you think about it? Do you think it's a replacement of, I don't know, fiat currency one day, or the markets are not big enough?
I've gone through different feelings about it. When it first came out, when I first recognized it, maybe a few years after it originally had come out. I mean, I had heard about it when it came out, but then when I really kind of learned a little bit about it, I thought, wow, this is going to be amazing. This is going to be, I can see this taking hold in so many different ways. And as time goes by, I feel less about it. And when you think it would be the opposite. And my biggest hang up on it is a couple things. One, so I live in South Florida. Initially, when I had moved here, you hear about the hurricanes and you hear about, make sure you have cash, water, and fuel, right? And so, having been through a couple of major hurricanes where like we've had, some major ones here in the last 4 or 5 years, and when you lose power, the only thing that matters is food, water, fuel. So electric cars are no good here when when that happens. And you need to have cash because you can't do a digital transaction. Not only do you not have internet, you don't have cell service. And so how good is it in a real dire situation? If I have a bunch of Bitcoin, how transferable is it? And so until I got into that real life situation, I was kind of like, that's kind of interesting. And then also, so it made me just feel less about it. Like I'm not going to have an incremental amount of Bitcoin on a card to be able to give to somebody, or, you know what I mean? If you don't have power, and these are like, massive world situations, like where we have, blackouts of technology or power. So I look at it and go, that scares me that anything would become completely digital. Then the next thing is, I've had Bitcoin taken out of my wallet, Bitcoin and Ethereum stolen from me, in the tens of thousands of dollars. I woke up one day and this happened to me not too long ago. And, it was a significant amount of money and it was gone. Somehow somebody got into my MetaMask wallet. Still not really exactly sure how it happened. And just sucked the money right out. And somehow I must have done a transaction or something happened. I'm not really sure, but it really left a bad taste in my mouth because I'm like, man, I have no repercussion for this. I mean, it's a lot of money. It's gone, what do I do about this? And so having gone through those two situations makes me feel less about it because I just don't feel secure with having, a massive amount of my net worth or having an entire amount of your net worth in digital because poof, that scares me. So I think what it is now is not what it will be and how it will be used. And maybe there's something I just don't see, and maybe that will change my mind. But for now, I'm not a huge believer in its massive impact.
Okay, that's fair. That's fair. So let's talk a little bit about traders and what you've learned over your, I don't know, 30 years of doing this. And I think as teachers, our market is our teacher, right? I mean, I always tell traders, they go, oh, Sergio, I want to day trade. I want to do this. I want to do that. I'm like, look, you can pay for trade all you want, but then you got to get the car and get in the race at some point. And when you get in the race, right, you're probably going to go hit every single wall on the track and other cars, because there's as good a drivers as you are out there, probably better than you. But people know this and ask me advice and whatever. But so we have a mutual friend, as you know, Jack Barugian, right? And he gave our audience some amazing advice. And so I'm pretty sure this stat is correct, right? About 85 to 90% of traders lose money, right? And so first, do you think that's correct? Number one. And number two, were you ever in that group and then kind of shuffled your way out of it with the mistakes you've made? And what kind of advice you would have for a beginner or an intermediate trader?
That stat is, I believe it's true to an extent, right? That the fact that 85, 90% or whatever the number is or even 95%. I mean, it's just everybody throws a number out there as if it's, the accurate one. And it's all, there's so many variables on, what they're trading, where they're trading, how much money they started with. I mean, there's a lot to unpack there, but I would say that, there's a much greater number of people that fail than succeed. But I also think that there's a much greater number of people that can make money, but they don't make as much money as they want to make. And therefore that puts them in the failure category. If you live in Florida or Los Angeles, and you come in and you make $50,000 on a $50,000 account, and you look at it and go, how am I going to go become a full-time trader? That's not a lot of money. You're not doing great. Right. And because it's just too expensive a lifestyle. But if you're living in, in a rural area and, you put, you have a small part-time job and you put $5,000 or $10,000 in an account and you make $10,000 to $15,000 on that for the year, is that a success story? Did you make money? I mean, is that enough for you? I mean, so that's why I say there's so many variables to it, because depending where you live, what your lifestyle is, what you're doing, expectations get in the way of success in this realm. So I would say that if you're a new trader, you have to be realistic. I mean, when I started in the business, it was like, okay, I put 25,000 and I thought I was going to be a millionaire quickly. Eventually I got to the level of success I wanted to, but it took, several years, many years, not just a few. And so I think that, and in those days, I was coming from the trading floor. We were the central focus. I had all these tools and people around me. I was in a professional environment, and it took me years to even get to that point. So I understood the business. So you're looking at, really a decade from when I started as a runner to when I really started having success as a trader, to where I could be on my own, pay my own stuff, and not just, clerking and working and doing whatever else I could to keep my head afloat, And so at the beginning, I probably could have made some money, but my expectations were so high that I just burned through money. So if you're a new trader, the advice is lower your expectations. Let time be your friend. Understand that it is a long-term time investment, right? I mean, it doesn't matter how much capital you start with. It doesn't quicken the curve. It's still going to take time. Like I said, I mean, and for everybody out there, you probably can find a way to make some money, but will it be enough? And so you have to be able to temper expectations, and that will give you the ability to stay in the business long enough. And eventually, hopefully you get to the point where you make the amount of money that you intended on doing, but that just doesn't happen quickly.
Yeah. I mean, a lot of people ask me, is trading a zero-sum game? What do you say to that? I mean, I don't think it is, because the variables are different. While your trading is different, exactly what you said, where you live is different. But, I know one thing, that it took me a few years, even the best mentors on Wall Street, to just get my feet wet. And then I never forget it. I go, obviously, the machines were coming into play, the exchanges were going away, the pits were going away. But then, my mentors always said, keep it simple, stupid. There's just, you don't have to make this too complicated. And what I think today is that's what's missing. I think that connection, the human connection that we had on the pits, right? And then you kind of felt the flow. Now everybody's online on their Robinhood account, swinging options, zero DTEs, and this and that, and all these products, which I believe, push people towards gambling. I mean, that's the way I look at it. Do you feel like today's trading is mostly gambling, and people are out there swinging options and here and there, and trying to become millionaires overnight?
Well, a lot of it's set up that way in a sense, because there's quick access. You need minimal funds, and you're coming in and you're doing it. But remember something too, Sergio, right? It's just, when you have a little bit of money, it is a much bigger gamble, right? I mean, the less money that I had, the bigger risk I took. The more money I had, the less risk I took. And so I think that, from the standpoint of where we are today, and the way that there's these, funded companies, and there's the zero DTEs where you can come in with very little money, and, and people are calling them lottos, and, those types of things. Remember, those people are coming from a place where they don't really have, a lot of them don't have the funds to actually sit in and have the time to work through it. Right. And so and even if even if they did have some of the money, the system is set up so much to kind of put them in that position because there are so many products that offer that it tends to be that way. I mean, I know that it just feeds a certain part of the human brain. When people come in, they immediately want action too. People want the ability to be able to make more money, right? I mean, and that's what's attractive to markets, right? I mean, that's why you have people that are in wealth management, and you have people that manage money on a much bigger scale for all these big people with big money, right? And then you've got the little day traders out there, even the ones that are medium in size, they're just they're a spot in the sea, and but they're all shooting to get to that point where they don't have to do that as much, and they have wealth management and somebody and so it's like, it is a gamble from the beginning because you're most likely coming from a place where you don't have the capital to do it. Now, mind you, if you have the capital to do it, you have to be smart enough to realize, I go back to where I said, set expectations, use these tools. Sometimes these tools are actually really good. Like I like zero DTEs in certain moments. I think they're a better tool than, an outright future at certain points in time. Like I'll use a zero DTE option on future or zero DTE in SPX or something like that. It might be a better risk managed way to do it, but you've got to get to the point where you can actually maximize those tools, not just throwing stuff at the wall and hopefully it sticks.
Yeah.
I mean, so the system is set up that way and it does have that feel of it because the access is there, but that's not going to go away. And you got to be smarter than everybody else. And you got to be able to utilize those tools when they make sense. When I go back to it, give yourself time. And eventually, that's how you take the gamble away from it, is you slow things down. You're not in the rush for the rush.
Yeah. I mean, it's, another thing my mentor said, it's never, it's not a sprint, it's a marathon. I mean, you can't, you can swing your options and do whatever you need to do. You may hit a lottery or two, but then what are the odds of hitting the lottery over and over and over and over again, right? So we have a couple of minutes remaining, at least, a few minutes. And I mean, I'll give you the floor. And, I don't have exactly that tweet with me because I don't want to look down and read it. But then if you have it in your head, which I'm sure you do, because I'm sure it took some time to put it all together, it had like 6 or 7 points. Just give us that. And then we'll end it with that. It was a
I'm
couple
trying
of
to
days
remember
ago.
which tweet it was. I'm going to pull up my tweets the other day. I mean, I've been tweeting quite a bit as it's Fed week. I'm trying to see which one.
It was like 1, 2, 3, 4. It was like I go like, this is it. This is the Bible. This you don't have to go any further than that. And but it doesn't have to be exactly that tweet. And I'm sure you have a lot in your head. And just to finish this episode, just tell our audience, give us your best advice, Anthony.
I think that I know the tweet you're talking about now. I think it's the one where I talked about if you're a trader that's having success and making money, you need to keep your head down. Don't talk about it. Keep pressing and saving.
Yeah.
And I think that's in today's day and age, the hardest thing I think for even those that are making money. And let's face it, there's a lot of traders out there that are having success. Once again, that depends on, what level of success you call it, right? But there's a lot of traders out there that are making money in this environment, right? And so there's a lot to be said about the ones that are having success right now too. And the one thing that I have learned that I think is extremely important is that when you're doing good, you got to keep doing good. And if you remember the line from Gordon Gekko when he said, "You did good, kid, but now you got to keep doing good."
Yeah.
And he talks about how, I remember when he had his first big deal, and I think he was like 800K or something. And he goes, "Now that's just a day's pay."
Yeah.
And if you remember that, and the reason why that has always resonated with me is because when you sit back and think about it, is that as a trader, you have a plan to make money, and everybody goes out there and you have a plan like, this is what I'm going to do. I'm going to try and make $1 million or whatever the number is, or whatever it is that you're trying to achieve, and you go out there and you get to the level you want. But what happens is that nobody has a plan for when they got there. Yeah. So they've planned to get there, but they don't have a plan to keep it. Yeah. And to me, in my experience, the keeping it part, the building on it, the growing, that's a much harder task. Yeah. And some people will say, well, that's crazy, Anthony. How's that possible? Well, because anybody can do what Charlie Sheen did in the movie and find the information of whatever he did. And he caught this one big trade and he made a bunch of money. Now he's on top of the world. He's making sushi with his beautiful girlfriend in New York City, and everything's great. But now you got to keep doing good.
Yeah.
Now that's hard. And so why that's so hard is because when people start to make money, psychologically, they have not prepared for what that's really like. Most people in their lives, especially when you talk about people like myself and many other people that came to the trading floor, they didn't come from wealth. So they didn't know what to do with it. And so they didn't have a plan on how to keep it and how to keep doing good.
Yeah.
So I talked about in that tweet was, if you're doing good, keep doing good. Keep your head down. One of the best things that a trader taught me early on was, if you're making money, keep making money. Don't tell anybody about it. Keep doing what you're doing. When you start losing money, go spend money. I'm like, this guy's out of his mind. Why would I go spend money when I'm losing? And I was doing the opposite. I was spending money when I was winning, and I was when I was losing, I wasn't doing anything. So I'd wallow in my misery. And when I was making money, instead of saving it and continuing to like try and pound on my success, I was just taking away from it little by little because I thought it was sustainable. And then we all go through periods of drought. And that's why those ebbs and flows of those traders that you see out there that like, I did great, or I did this, or they're all about me, and they're all about, all of this extravagance that they're able to get from trading. What they don't realize, and they soon will if they haven't already, and it is that it's not going to last. It doesn't matter how good you are. I mean, I felt that there was a time where I was like, I'm getting really good at this. This is not going to last, or this is going to last. There's nothing that's going to stop me. And it didn't last, and it just derailed me.
Yeah.
And so that to me is where the true art of existing for a long period of time, it takes so much more than just getting there. It's about sustaining it, and building it, and keeping it. And so there's so much more to the story than just the first chapter.
Yeah, absolutely. And, I want to thank you, obviously, but I also want you to tell our audience about your channel. He has a wonderful YouTube channel, Anthony Crudele. Please follow him on Twitter. I mean, this is the OG right here. People go like, oh, Serge, you know so much. I'm like, I don't know anything compared to these guys. And follow him on Twitter. So give us all that information. Anthony Crudele is your YouTube channel, obviously. And then
everything's Anthony Crudele. You can find it there. And Serge, and it's so funny is that like, even considering myself an OG, I really don't even consider that. I just know, I've been very fortunate and blessed. So. Yeah. And I was, it was one of these people that was actually fortunate enough to be a part of the trading floor. And I look at so many of the guys that came before me, and it's all a timing thing. Where are you in history? Where are you on the timeline of things that happen? And I think that for all the new traders out there, just understand when you get in, when it gets to you and your timeline, embrace the fact that it's going to take time, embrace the journey. Trading is a journey of oneself. Plug in my book that I've been writing for the last year. That's coming out soon. I think that every trader has a similar journey, and mine is going to sound different than yours, Serge, or it's going to, sound different from Jack's or other people's, because there's all different things that happen. But along the course of every trader's journey, there's so much similarities to it. And we all go through this in a very similar fashion. So I appreciate you having me on. I look forward to your success with this channel. And I can't wait to see future interviews you have coming on this great show.
Absolutely. Yeah. So what is the book? When is it coming out, or did you finish it yet?
No, it's going to be called Trading is a Journey of Oneself. Okay. And it will be out hopefully by 2025, early 2025, maybe even Christmas of 24. It will definitely. I've been reading it, changing it, and it's I'm excited about it because it's something I've been working on for some time, and it's a book that I think that every trader can read, no matter where they are in their journey, and hopefully it helps them.
It'll be definitely on my Kindle. I can assure you that. And and again, I want to thank you so much. You're a busy man. You took your time to do this. I appreciate it. And, we'll obviously cross paths on Twitter, and maybe one of these days I'll make to your radio show or your podcast. So we'll see how that goes.
I look forward to
it. Thank you so much. Serge.